Today, we are going to talk about something super important that does not get enough attention: getting over the fear of investing in the stock market. If you are watching this video, then you are someone who has money saved up in your bank account but feel too scared to invest in the stock market. Or maybe you have watched your friends achieve financial success by investing, but the fear of investing has held you back. Or perhaps you have just started earning and the idea of investing in the stock market scares you out. Lots of people spend most of their life never investing in the stock market and end up missing out on hundreds of thousands and even millions of dollars that they could have made. In this video, I'll share 6 simple steps that will help you overcome your fears and feel confident about investing in the stock market. I will share data and facts that can help you get past these fears and help you achieve a financially successful future. My name is Kanak and welcome back to my channel. To learn more about investing, subscribe to my channel, and your support is what keeps this channel running. So show your support by liking the video and dropping your thoughts in the comment section below. The most common fear of most people is that they will lose money in the stock market. They see the stock market like a casino where one person's loss means another person's gain. But here's the thing, when you invest in stocks, you're buying a piece of a real business. Stocks are not just numbers that go up and down. And yes, there is a risk in investing in individual stocks because businesses can fail or lose value over time. But the way to reduce this risk while benefiting from the potential gains that the stock market offers over the long term is by investing in index funds like the S&P 500. The S&P 500 index fund includes stocks of 500 largest companies in the US. So instead of betting on just one company, you're spreading your money across 500 largest businesses. If you look at the S&P 500's history over the last 40 years, you'll see it has gone up a lot, from 159 points in 1984 to about 5,200 points in 2024. That's a solid proof that over time, the stock market tends to rise. If investing in 500 largest companies still scares you, then think about this. If all the 500 largest companies in the US fail at once and you lose everything, then it would mean there is a problem or crisis way beyond just the stock market. So the first step to conquer your fear of investing is to diversify your investment by investing in index funds and remove the risk of failure of an individual company. Now, the second most common fear people have is what if they invest and the stock market crashes right after their investment. Here is an interesting fact. If you had invested just before the big crashes like the 2020 COVID-19 crash or the 2008 financial crisis and then held on to your investments for a few years, you would have not only bounced back from your losses, but also made some decent profits. I made a video that shows if you had invested right before the market crashes of the past 70 years and held on to your investment for at least 10 years, you would have still made a decent return. You can check out the description for the link to the video. Now look at the S&P 500 chart for the past 40 years on your screen. Even if you invested before the crashes in 1987, 2000, 2007 or 2020, you would still have grown your wealth by 2024. As the famous saying goes, time in the market is more important than timing the market. So the second step to conquer your fear is to think long term and aim to invest for at least 10 years. Now the third important step is to start small. Putting all your money into the stock market at once can be scary. Instead, start by investing small amounts every month. As you watch your portfolio grow and learn how stock market works, you'll feel more confident. Fear often comes from feeling out of control, but by monitoring your portfolio regularly, you'll become more aware of your own emotions and slowly become comfortable with temporary drops in the stock prices. This will help build confidence and can make investing in the stock market easier. Now the fourth important step is to only invest money that you won't need for a long time. To multiply your wealth in the stock market, you need to stay invested for a very long time. That means only investing money that you won't need for the next 5 or 10 years. A good rule of thumb is to keep about 6 months worth of living expenses in an emergency fund. But if you're risk averse and not having cash makes you uncomfortable, then you can keep 18 to 24 months worth of living expenses in savings and invest the rest in the stock market for the long haul, like 5 to 10 years at least. If this money is not something you will need immediately, you won't stress if your portfolio takes a temporary dip and you can wait until the market bounces back. Now here is the fifth step which many people overlook, which is avoid watching too much news about stock market. If you turn on any news channel discussing stocks, they'll often focus on things like recessions, market crashes, or some political event negatively affecting the stock market. The goal of media is to grab your attention and keep you on the edge. The more you watch, the more scared you might become about investing. Negative news tends to grab viewer attention more than positive news, so you are more likely to feel anxious by watching the media than by looking at the actual facts. Keep in mind that over the past 70 years, despite major events like wars, pandemics, recessions, and political conflicts, the US stock market has still managed to generate more than 10% returns over the long term. So the fifth step is to avoid the noise of media. Now let us talk about the sixth and very useful step, which is to set up automatic investing using a strategy called dollar cost averaging into an index fund like the S&P 500, and try not to check your brokerage account too often. The less you look at your account, the less likely you are to get nervous and sell when the market dips. And for successful investing, you need to stay invested for a very long time period. For example, you could set up something simple like investing $10 every day into a low-cost S&P 500 ETF like WOO. And you will be surprised to know that many professional fund managers fail to consistently beat the S&P 500 index over a long time period of 10 or 20 years. So by investing in the index, you could end up outperforming most of the professional fund managers in the long run. Finally, I'll share an interesting quote from Susan Jeffers. The only way to get rid of the fear of doing something is to go out and do it. I hope you found this video helpful, and let me know your thoughts in the comment section below.